Right. Republican, Thorn in California, Democratic caller. Let's hear from you next.
Hey guys, we're gonna do a quick review and just lead up into the debate. So we'll start as soon as my friend here gets on.
See her take down Trump and have it be this a really great constitution of
Right, Canela?
in his life.
You call it primetime TV. What do you mean?
I mean, I'm waiting for the next season of House of the Dragon, and this is the next best thing.
Okay. Let's take a look at New York Times headline by their media reporter today, predicting the
girl.
debate ratings.
Hey.
Wait for Lisa.
Steinfeld.
There
Sally?
she is. All right, guys. So we're gonna do a quick review, and we're just gonna lead up into the debate, if that's all right. Since we know, this is stock people. You're concerned with money. This political thing also talks about money, deals with money, your money and stuff like that. So it's probably worth watching, even though we know it's all a sham. But hey, we got to play the part. So we'll do something quick and then get off so you guys can watch the debate. I recommend you watch it at C-SPAN or maybe PBS, but preferably C-SPAN, so that you don't get all the filtered caca and a feedback that they just talk about nonsense with. So let's get going. So I had a good day today. So I started out with, believe it or not, something called Oracle. And I'm going to put this, I may start putting this on my main list because I just happen to be going through my, high and by. You don't want to watch the political debate?
No.
All right.
Go. It's only 1 hour.
All right. You don't want to take a nap here?
No.
All right.
Yeah, I gotta drop Carlitos.
All right. Turn it on the radio.
Talk to you later.
Have a good one, man.
Okay.
All right. Sorry for the interruption, guys. Familiar coming in and people coming in from a quote fishing trip. So anyway, Oracle did very well today. There was some type of news that it had merged with one of the tech companies.
I believe it had earnings.
Okay, it had earnings, and then the news was that it merged with it did some type of agreement with it was either Amazon or Google or one of those, like or Apple. I think it was Apple, maybe. It did something where they're gonna be something related to data servers or something like that. Or so with that news plus earnings were good. We can see that Oracle shot up, and we can see where it's usually at, where it had been around this 138, 139 area, and that tells you all you need to know over $15 today. That it shot up. A nice gap up. It looks like it was trending up anyway, which is good. And all of these little green E's here, other than back in September of 2022, and then again in March, it looks like it's been doing well for earnings. Yeah, so I guess those other two earnings were just outliers, but overall it's been consistent. Did its drop? It was like $40 during the worst of COVID. Before COVID, this was around a $50 to $55 stock.
This is consistently going up.
Yeah, so we see how since after COVID, all of these companies have been doing very, very well and making money hand over fist. And of course, as they always do, lying about how, we can't make money anymore. And if you look at these numbers, their records for earnings that people have made, and you see the valuation beforehand, and before COVID, and you see the valuation after COVID, and they're making a lot more money. Okay, earnings, not just revenue, but earnings. They're making a lot more earnings. So when people tell you, oh, the price of a 12-ounce box of cereal that used to be 16 ounces, it went from 16 ounces and $3. Now it's 12 ounces and $5 and $6. And they say, oh, well, this is just inflation. No, it's inflation, let's say 15%, and the other 85% is just greed, and they found out they can push they can push the consumer to the limit. And when COVID hit, they took that chance to say, hey, let's get some of our money back. People are asking for this $15 an hour thing, so let's just take advantage of it and bump up the prices. And we can use COVID and say inflation as the example, because interest rates are high. That's all it was. But anyway, I'll get off my sidetrack, off my soapbox here. And because of what happened with Oracle, the earnings and the work is going to be doing with, we'll just call it Apple, because I believe it is. They shot up. I got in. And we'll take a quick look at it. So I got in here when it was going up. I can't even. I'm trying to see. Let me get rid of this caca. Why is this order still here? I'm trying to move this back. So I got in, I think sometime here before it went all the way. Okay. I can't see. I got in here, probably got out here. I can't see where I initially went up, but it's somewhere around here and here. And then it went up. I did do some shorts on this thing. And I just played around with it, but this is where the bulk of the dinero came from today. We went long, and then after I got out here, these were all gonna be shorts here that I did. All of these were shorts here. And I made money doing that. What else did I do? I also looked at PLTR, which was a good one. Ooh, that was crazy. PLTR, we initially were, I can't remember what I was doing on this one. I always forget the colors on these. I gotta remember that. What color is blue? Doesn't tell me. Let's see. I believe I went long initially. And so we bottomed out here, and then it came back up, and I got out. And then after that, then I was shorting, because I saw that it was kind of weak. But initially, I got in here long, bottom out, got out, and then I saw it was weak, and I started to short it as it came down. This was good because I was doing 400, not $400 hits, but 400 share hits each. So you could make a pretty penny with only it moving like 50 cents or something like that, 75 cents. And so then let's see, did I get into anything else? Or Oh, I did the SPY, but the SPY I screwed up on the SPY. I was shorting that, and towards the end, it started going up. And the Q, I made a few dollars there. But mainly it was PLTR and Oracle. Oh, yes, and my favorite, NVDA. So we'll take a look at that. Those were the three. Apple was muscle minnow, but it was mainly NVDA. So NVDA here, I believe on NVDA, I was going long and got screwed in the beginning and lost a few dollars, and then I shorted it, and that's where I made my money shorting. Because I saw that it was weak. It started to come up by the time I got in. It should have been shorted. I had to reverse. And if you shorted this, you could have made money because as you can see, it, it just progressively goes down. A nice out here. Basically right at the bottom. And yeah, and then once I got out there, I made that. Then I went back to Oracle. I started with NVDA, then I got into Oracle and PLTR, and I kind of stayed with that. So let's just look at my main quotes, and we'll do a quick net change. Almost 5% Tesla. We know Tesla always goes nuts. But we'll do a quick look at it. So here, you made money the first half hour or so. And then you could have shorted and went basically back to the pre-market and then went back up. So this was an easy up, down, up, which going into Tuesday, going into Wednesday makes sense. The first 15 to 30 minutes, you go up in anticipation of a day like Tuesday, which is a down day. You would go up the first half hour, then you go down for most of the day because Tuesday's a down day. And then as you're leading into Wednesday, which is an up day, you will go back up. So, the up trend here was a little bit longer than normal, but it's fine, Tesla's always like that. But this is one of the reasons why I really like Tesla after I learned about it. And started trading it at the beginning. I was afraid of it. Especially before it did a split because it was much more volatile. It is a lot less volatile now that it has to split, but it is still cray. But the one thing about it is if you get it right on a day like this, you say, hey, the first half hour is going to go up, and then most of the rest of the day is going to go down like it would do on a Tuesday. And then as we get into close, and close can be anywhere between 1 p.m. to 4 p.m. It could start around 1 p.m. or it could be 3 p.m. to 4 p.m. It could start at 3. It just depends on how long it was to run it. But it ran it for a long time here. But this was a good day where you could have made money 3 times with just one stock. And it could have been like, hey, let's make 221, the 225, $2, $3, $4, $5, 225, all the way down to either 222. So that's another $3, and then you could have kept going and got $6. And then once it hit rock bottom, you see it's consolidating here, just like you see, boom, it starts to go down. So even if you don't get it when it starts to go down here, you say, oh, it's consolidating here, boom, boom, boom. It goes down, consolidates, boom, 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 it started to go up. So just, you don't have to say, oh, I missed this bottom wick, so I can't get in. It came back up, it consolidated, and you could have been like, oh, this is consolidating now. We're getting close to, it's, 15 minutes here to the half hour mark. It's going to go up. So then you could have, while it was consolidating, you could have got in here, somewhere between here, and watched it go up. Got your money out, say, okay, yo, it went down a little bit, it dropped. Let's say you missed this point and you let it drop like a fool because you wasn't watching it. Then you saw it consolidate, you still could have got out with some money because you got in right here. So stuff like this is what you have to pay attention to. You may not get the bottom wick, the exact top wick, the exact bottom wick, the exact top wick, but you can get it. So you don't have to get this 219 point to still be able to get in at 222. 222 to freaking 226 is still $4 a share. And even if you go 222, you miss this top wick, 226, and you get out around here, that's 222 to 223.73. That's nearly $2 a share. So it's still money to be made. You don't have to be like, oh, I have to get it exactly, because maybe you're not as aggressive as getting out. Maybe you're kind of slow and you tend to watch stuff. Here, when it took us down to, I probably would have tried to get out, but some people don't. Some people just watch it bleed down. So then, hey, you're going to get down closer to here or something like that. But the point is, or maybe you even get it down out here. But the point is, you still made money. You went, oh, boom to boom. Okay, instead of boom to boom. You don't have to always get the top and bottom wick. All right. Same thing here, where it consolidated and it went down. Okay, you could say, oh, what is it gonna do? Is it gonna go back up or go back down or whatever? So let's say you say, oh, it's going back up. It came up here. It's gonna go long, and then you see it wick down. Just do a quick reverse. Boom, boom, boom. And then you get out somewhere around here, still make money. And then as it comes back up, okay, it's consolidating or whatever, it's slowly going up. It's easy to make money, that's all I'm saying, if you just pay attention. You don't even have to do a lot of different stocks. You could just focus on one stock and make the money there. Lyft 4%, we don't trade that. AMD was very strong compared to NVDA, which is interesting. Amazon, another strong one for the day. They say Microsoft was relatively soft, but it looked pretty good. It was a weird, okay, it did everything right here. But then it came back up. Okay, they're talking about from where it closed, it closed lower.
It's 9 o'clock, ma'am.
All right then. They're about to start this thing. I'm watching on the screen, so I know they haven't started it because I'm looking at it. But that's that. For Lowe's, American Airlines, they had a good day the other day, so you would expect this.
I'm gonna KAT because I gotta go set up to watch it. I'll talk to you guys later.
All right, peace out. They haven't started it yet, Elisa.
Yeah, I know, but I have to do something else.
Okay.